The last goal of this stage of the finance team, you've probably guessed it, is to get out of it ASAP. Now that's not to go against what I just mentioned in terms of learning the costings and learning the intricacies of your business, but at the same time you want to balance that out. The first stage of your finance team's evolution, you probably guessed it, is the DIY stage, the do-it-yourself. You're early in your business journey, everything falls at your feet. So looking at the 3 C's, you can probably work them out. Competency, you're doing something that you're not really enjoying or not trained for necessarily. It's highly unlikely that you're in the business of bookkeeping. So in this case, if you're starting up your plumbing business, your construction business, your hairdressing salon, whatever it is, you're doing the books of it, but it's not your core competency. Then when you look at the second C of capacity, it's an opportunity cost because you only have so many hours in the day and you have 27 hours of work to complete in that 24-hour day. On top of that, you throw the bookkeeping, you throw the accounts at yourself, you're following up people to make payment, you're following up on paying creditors, you're entering the information into the system. So your capacity is diminished because you're also trying to do everything else within the business. The third C of cost, you're trying to minimize it. And as we mentioned before, it's more of an opportunity cost. It's a cost on your time from doing other things in the business, but it's a decision you make at this point in time because you either want to reinvest that money back into growth or to help pay yourself. The other side is the cost of what you put into your software, your ERP. You're most likely using an entry-level software or program at this point in time, which is completely fine for reasons we'll share with you in a moment. Now, the risks at this stage are late nights. There's a good chance you're going to be entering data between the hours of 10 p.m. and 1 a.m. So there's a risk associated with the late nights. The second one is it's highly unlikely that you enjoy it. Now, I don't take that personally as an accountant. When I started, it was something that I enjoyed, getting into the nitty-gritty of the transactions and doing the data entry, but I don't blame you. That's not the reason you get into business, but it's an important part of making sure you keep up to speed. The next one is inaccuracies. No offense, there's a chance that you might be doing something wrong. So making sure that you're minimizing those inaccuracies, but that is a risk as well. And the last one is knowing when things are due. So when you have to pay your GST or your VAT or your pay as you go or your pay as you earn, wherever you are in the world, making sure that they're all done, they're done accurately, and they're paid for, as well as your end of financial year lodgements like your tax returns and also your company or business financials as well. They're the risks associated with the DIY stage. The late nights, you're doing something you probably don't enjoy, the inaccuracies, and making sure you don't miss anything. Having looked at the risks, there's also a lot of opportunities and great things around this time within your finance team's evolution and also your business owner evolution as well. So the first one of opportunities is it allows you to save money. As we said before, you can reinvest more money back into the business and also helps you take a wage a bit easier because you're not paying someone else to do that task. But the second element is it allows you to get into the nitty-gritty of understanding your business finances, which is something that's going to be crucial as your business grows. So you're going to be costing in every invoice. You're going to be entering all the expenses. You're going to know if your inflows are exceeding your outflows. And if there's any risk that that isn't the case, i.e. you're losing money, you're going to be the first to know because you're going to look at what you're invoicing versus your cost of doing business. So don't underestimate the value of that part of your business journey to get into the nitty-gritty, get into the weeds. It's a great learning time for you within your business. So look at the glass half full option. The glass half empty is going, yeah, I'm doing the books, but the half full is going, this is part of my business journey and my business evolution. So how does running the finance team, i.e. yourself, look at this stage of your business? Most likely you're managing everything by what's cash in the bank. If there's money in the bank, you pay the suppliers. If there's no money in the bank, you're aiming to get money come in from your debtors ASAP. That's the seesaw effect that you'll see at this early stage of the business. But also the bank account is going to be your source of validity over this early part of your journey. If you see your bank account increasing, there's a strong probability that your business is proceeding in the direction that you want it to. My only caveat on that is make sure that you're still paying your tax. You're putting aside money for those obligations because you want to understand what cash in your bank account is yours versus a future obligation you have to pay to the tax man. Which segues to the next point, is getting good counsel, having someone review what you're doing. And at this stage, it's most likely your tax accountant. So make sure that they're with you on this journey to ensure that you know when those payments are due and how much those payments are going to be, to ensure you're staying compliant with the tax man, but you're also planning. And I used to love it at this early stage of the business, is knowing what cash is mine versus what cash is someone else's. One of the most crucial parts at this part of your journey, and we've already said it under opportunities, is it's your chance to understand the costings of your business. I personally believe you have to understand exactly what the costs are of producing whatever you produce. So if you're providing a service, you need to know how long it takes you to deliver that service relative to the cost of your wages. If you're delivering a product, you need to understand what does that product cost to get it all the way into your possession and all the way into the client's possession, and what's the margin on those. So really embrace the understanding of what are the costings within your business, especially early on, because later on in business, when you're employing other people, you're going to need to know whether they're doing the right thing by you in terms of the accuracy of the costing information they're providing you. The last goal of this stage of the finance team, you've probably guessed it, is to get out of it ASAP. Now that's not to go against what I just mentioned in terms of learning the costings and learning the intricacies of your business, but at the same time you want to balance that out. You want to move on, you want to employ that bookkeeper, move to that next stage of your finance team's evolution. So your relationship with the finance team at this point in time is what I would define as entrenched, because it's going to be you. You're going to be doing the work, you're going to be entrenched in the execution of every transaction and getting it done. So the key points at this stage, I think, take advantage of this part of your business journey. Get into the weeds, get into the nitty-gritty of understanding your transactions, understanding your costings, because that's going to help you in the future when you have a finance team to make sure they know what they're talking about and you're not just entrusting them that they're going to do the right thing. But the other objective, as we said, is to also get out of it ASAP.